What is de-dollarization and what does it mean for crypto?
For all of our lives, the dollar has been the king of currencies around the world. But is that about to change?
Analysts have been warning of the dollar's impending doom.
I don't want to be overly dramatic, but I think I will use the word doom in the long term.
Some changes are coming even for a dominant currency such as the dollar. It could become a less important payment currency in international transactions.
With the recent talk about de-dollarization, let's explore its potential implications on the global economy and how it may affect Bitcoin and other cryptocurrencies. If you've been on crypto Twitter at all in the last few weeks, you've definitely come across de-dollarization. The topic is everywhere right now.
For nearly 80 years since the end of the Second World War, the US dollar has effectively been the currency of the world for our entire lifetimes.
So, is the dollar going to zero? Well, today we'll discuss just that. I'm your host Trevor with CMC, and let's get started. So, what is de-dollarization? Well, the easiest way to answer this is to consult your friendly neighborhood online encyclopedia. De-dollarization is a process of substituting US dollar as a currency used for trading oil and or other commodities, so i.e. petrodollar, and buying US dollars for the forex reserves, bilateral trade agreements, and dollar-denominated assets. De-dollarization has become a major talking point that has made it to the mainstream news thanks to headlines like China-Russia yuan-denominated trade hitting record highs, yuan's share of trade finance doubling since the start of the Ukraine war, and China completing the first LNG trade with France in yuan. You can easily spot the common denominator here. China currency good, green currency bad. And that's even gotten the attention of a particular former US president.
China wants to change the standard, the currency standard. And if that happens, that's like losing a world war.
So in short, people are panicking at the end of the dollar's dominance.
Don't panic! Don't panic! Hush! Don't panic! You're all right!
So let's unpack whether that's actually happening. Is de-dollarization happening? If yes, how much? Here's where we have to get into the trenches of analyzing macroeconomic data. Good thing a couple of smart people have already done all the work. The consensus among reputable experts is that de-dollarization is happening at the margin, but the dollar status as the world's reserve currency is safe. For now. Brent Donnelly, president of Spectrum Markets, thinks de-dollarization is not a thing. He cites three main reasons. Firstly, fear-mongering about the dollar's imminent demise has been around before and never materialized as badly as it sounds. Second, the dollar maintains a stable share of global payments and volume. Thirdly, the dollar's share of foreign exchange reserves is down from its peak value, but the meat of that move happened a decade ago and isn't a problem for the US anyway. Those are some of the main themes that repeatedly come up about de-dollarization and whether it's really happening. Michael Pettis, Carnegie Senior Fellow and Professor of Finance, also sees three main reasons why meaningful de-dollarization isn't happening anytime soon. Changing the system is difficult because the challenging currencies cannot credibly replace the USD. In any case, America would have to actively support de-dollarization for it to happen. A hypothetical commodity currency would be worse than the dollar because it would be pro-cyclical and more volatile. While commodity prices are low, the states backing this currency would sell it to prop up their economies, and because that is exactly when its value would be the lowest. In other words, China doesn't really want the yuan to replace the dollar, and neither is it strategically well placed for that to happen. What China does want is to use its dollars in a way that benefits its national interests. Imagine you are China, you receive dollars for selling phones to Americans. So how can you use these dollars? Well, you can, for example, buy lots and lots of American assets. One American asset that's easy to acquire is US government debt, aka treasuries. China has been recycling its massive dollar surpluses into treasuries, which is where the China holds a lot of American debt headlines come from. If China buys less US debt, then that would count as a form of de-dollarization. And that's exactly what's happening according to Luke Groman. Groman argues that China does not want so much to move away from the dollar as the currency, but it does want to move away from holding claims on dollar-denominated debt. Ideally, China would want to remonetize gold and use that as a reserve asset. The reasoning? Well, gold is harder to weaponize and also sanction. Economics blogger Noah Smith thinks that it's not a threat to the dollar's hegemony. Even if you were to pump gold, the US and its allies hold more than 70% of gold reserves, making such a move by China ineffective. Finally, we should ask, is the dollar as the reserve currency even the big deal it's made out to be? Well, the ever-knowledgeable Bitcoin expert Matthew Pines thinks that the fears of de-dollarization are just a proxy for fears the US will lose its status as the world's leader. And indeed, maybe a bit of de-dollarization could be good. Because as Lynn Alden does, you can make the case that a powerful dollar is good for elites, but not for the average Joe. Without getting into the economic nitty-gritty, having a bit less global reserve currency juice would actually probably help US manufacturing and thus American blue-collar workers. So let's conclude. The dollar isn't going anywhere for now, but other countries have less appetite for dollar debt and are looking for alternatives, and the US itself may welcome all of this. Okay, great economic lesson, you may say, but what does this mean for me as a crypto holder? Well, let's get into that. So what does that mean for crypto? Well, we've discussed the relationship between the dollar and crypto, specifically Bitcoin, and many articles on Alexandria, which you can find at the top of the description below. Most recently so in the relationship between Bretton Woods 3 and crypto, and the dollar milkshake theory in crypto. The Bretton Woods 3 theory is essentially the academic way to argue for de-dollarization. Regarding crypto, here's what we've concluded. On the one hand, crypto could become an alternative payment system or even a global reserve. Bitcoin as a digital commodity could become a marginal addition as a central bank reserve. Even a Harvard University research paper recommends Bitcoin. On the other hand, there are significant downsides for nation states to adding Bitcoins to their reserves, as we explored in the Bitcoin nation state theory. The more Bitcoin is seen as a digital commodity and not as a speculative asset, the less volatile it'll be, and vice versa. And that has not changed. In fact, Bitcoin recently hit 30,000, so maybe it's starting to slowly make the transition to a safe haven asset. Again, it's complicated. Yes, in theory, Bitcoin exhibits many desirable qualities as a reserve asset. It may not become the next world reserve currency, but it could at least rival analog gold as one alternative reserve asset. But in practice, we have seen the US crack down hard on crypto in the first months of 2023. Even though industry leaders like Brian Armstrong warn that clear and correct regulation is a matter of national security, the current presidential administration has, unfortunately, chosen to be on the warpath with the crypto industry. Currently, and this could and hopefully will change, a de-dollarization push for a bigger role of crypto is likely to come from outside the US, if at all. For example, China is backtracking on its crypto ban, welcoming the industry back through the back door by welcoming exchanges and stablecoins in Hong Kong. So the pro-crypto argument for China is clear. Maybe crypto cannot be easily controlled, but the upside is that it cannot be easily sanctioned as well either, and it can be at least a useful tool among others. By design, de-dollarization means substituting the dollar for other currencies. Even if only a fraction of the liquidity is directed to cryptocurrencies, that could pump prices in the long run, but that is not guaranteed by any means.